Good evening, grade 10 learners. This short video is a tutorial on one of your exercises you needed to complete for the general journal. It's just going to be me talking you through the transactions, highlighting keywords that you need to understand, and of course, showing the entries into the general journal. So if we have a look at Wyndham Traders, your first transaction was a discount allowed cancelled. So where I've highlighted the words in a different color, those are your keywords that you need to look at for each of the transactions as we go through the exercise. So if you look at this transaction, it says that a check for 1,460 was entered into our cash payments journal, but it was originally a check that we received from a debtor for 1,600. This means that this was a dishonored check, meaning that the check that was given to us by the customer had bounced. We therefore need to work out what was the discount we had previously allowed the debtor, and that discount has to then be cancelled because the check has bounced. So if you look at my calculation at the bottom, it's 1,600, which was the debt owed, minus the 1,460, which was the original check we had received, which gives us 140. We then enter that into our general journal. We have debited the debtor because he now owes us that discount. We credit discount allowed because that discount has now been cancelled. And we now have to show the effect on debtor's control. And we debit the 140 to show that we are adding the 140 back to what the debtor owes. Moving on to transaction 2, we looked at an example of bad debts. So the same debtor, we have now decided that we are going to write off his account. So as it says, CCAM's account must be written off as irrecoverable for the entire amount that he owed. The entire amount that he owed was 1,600. So the general journal entry, we debit bad debts, credit the debtor because he no longer owes that money to us. We have written him off as a bad debt, which means we don't expect to receive that money from him. And if we've written off his account, we need to show the effect in debtor's control, which would be a credit of 1,600. Moving on to transaction 3, this is drawings of stock. So if we look at our transaction, what is important for us to note is that R. Rich took goods costing 3,250. The owner always takes stock at cost price. If we look at the second part of that transaction, I've not highlighted it because it says that he withdrew cash for his own use. Remember that the general journal does not work with cash transactions. We already have a journal where we would record cash drawings, and that is the cash payments journal. So the only portion we would be interested here is the portion where the owner takes goods costing the 3,250. So moving on to the general journal, we debit drawings and we credit our trading stock because that is the stock that we have removed for our personal use. Just to note, we do not make any entries in debtors or creditors because we have not worked with a debtor or a creditor. Transaction 4 looks at us charging interest on an overdue account of one of our debtors. So our debtor is D. David, and we charged him interest of 12% over a 3-month period for his overdue account of 2,000 Rand. So now the debtor owes us not just the 2,000 Rand, but also the interest. So we need to add to what he owes. Therefore, we debit the debtor with 60 Rand. We credit interest income because we are expecting to receive that interest as income on his overdue account. And the effect on debtor's control is a debit because we are adding to what that debtor owes us. Transaction 5 is a correction of error for a creditor. So in this case, we know that we are working with a creditor because it talks about goods purchased. So if we purchased goods, it means that we have bought trading stock on credit. So in this case, we purchased from BB Wholesalers, but instead of posting to his account, we incorrectly posted to the account of B Wholesalers. So we need to reverse the entry. So initially we would have credited B Wholesalers. So because we are reversing the entry, we now have to debit B Wholesalers with 1,440, but that amount needs to be added to BB Wholesalers, and we therefore credit BB Wholesalers. We now need to show the effect on creditors control. So we take away from B Wholesalers because we are debiting his account. So in effect, it would be a debit if a transaction creditors control, but we now need to add that amount to BB Wholesalers. So we therefore show the credit in creditors control. Transaction 6, also correction of error, but now working with a debtor. So it says the account of a debtor, B Brown, was credited with an amount of 1,400 Rand, but we had in fact received the money from B Brain. So we need to add back the 1,400 to B Brown because he still owes us that money, and we need to take away the 1,400 from B Brain because he actually has paid us the money. So we would debit B Brown because we are adding back to his account of 1,400, and we credit B Brain because he has actually paid us that 1,400. We also need to show the overall effect in debtors control. So it's a debit to B Brown's account of 1,400, we are adding back, and a credit to B Brain's account of 1,400 because we are taking away from what he owes. Transaction 7 is us being charged interest in an overdue account. So our creditor is now charging us interest on the money that we owe them. So it says, gee whiz, charged the business 8% interest for the last quarter on our overdue account of 5,000 Rand. So as you can see, I've included the calculation, and it shows over and above our account of 5,000 Rand, we now also are liable for interest of 100 Rand. That interest is an expense, and we therefore debit it. And we credit gee whiz because we now owe an extra 100 Rand to our creditor. We need to show the overall effect in creditors control, and that would be a credit of 100 Rand because that is what we owe to the creditor over and above the 5,000 Rand. Please remember that this was the last transaction. So once all your transactions are entered into the general journal, you don't need to total your debit and credit columns, but you do need to total your debit and credit columns in debtors control and your debit and credit columns in creditors control. These will give you your journal debits and your journal credits for each control account in the general ledger. Okay, where to now? So what I would suggest is you use this video as a guide of going over Wyndham Traders again in conjunction with the question and the memo that I've already posted on Google Classrooms. You can then try exercise 2 Nissan Traders again if you've not already done so, and if you really need any assistance, you should give us a call or an email. Thank you very much.